This is a tutorial on the basics of technical analysis. Right now I'm looking at the Bitcoin to USD charts on Bitstamp using Coinigy as my main platform. Coinigy has a wide variety of different types of cryptocurrency markets that you can choose from. Technical analysis is a way for you to quantify price action with a visual representation on the charts. It helps you measure the price of a market and to be able to determine the trend in which direction a market is moving, right? So each one of these bars, right now I'm on the daily, so this is the 1D. You have a variety of different time frames. Generally for larger trends, I like to look at the larger time frames like the 1 day and the 1 week. Each one of these bars represents an open, a close, the high and the low, right? So when you have a red candle, generally that means that the price closed lower than where it opened. And when you have a green candle, it represents the price closing higher than where it opened. So when you have when you put it all together and have this visual representation, you can see a much bigger picture. You can see a story. The charts kind of tell you a story of market history. Like, so for example, if you look at this candle right here, this tells us a story of Bitfinex getting hacked and a bunch of people kind of panic selling, right? When you look at this candle right here, we see a story of China kind of taking over the market, likely due to the yuan devaluation. Right here we see a story of Glitchfinex. This is when Bitfinex had a glitch in their trading engine. Here we see a story of Bitstamp getting hacked. We see a story of the China bubble right here, where these markets are going parabolic or exaggerated and then crashing. There's often, this is why I like to combine fundamental with technical analysis, because there's often news events that can act as a catalyst, which can create enough momentum to create a trend, right? So one of the most basic tools to use is just called a trend line. And trend lines are good to be able to quantify where the general trend is and identify support and resistance levels. So for example, if I were to start down here and pull this trend line all the way up here, we can see multiple points of contact. You need at least 3 points of contact in order for there to be a trend, to show us that the overall trend over this past year has been somewhat bullish, right? We've been in a bull trend, right? And now the same can be applied for a bear trend. So since we had this big correction here, the Bitcoin markets for most of 2014 has been in a bear trend. So you can see, basically you can see multiple points of contact here. Now, you're not going to get like exact price areas, right? You'll get general areas, but it doesn't have to be exact or extremely precise, right? Because we're just looking at general zones and regions here, right? So let me just delete these. So that's just determining bear trend versus bull trend, the most basic way. Now, there's also support and resistance, right? So let's look at most of 2015 when the price was in a range. So support is an area, a price area where buyers step in and take over the market, right? So we can see a visual representation of this. So let's just look at this area right here. So we can see a lot of support down through here, close to the 200 USD region. Now sometimes you can get things like fake out when the price can break down below support but comes back up. And then resistance is a general area where sellers take over and they start to push the markets down. Now, if you look at the price area between support and resistance, you get this general trading range. So we can see here in the history of Bitcoin that it was kind of ranging on average between 200 and 300 USD. So once you've identified support and resistance areas, then you can look for breakouts and breakdowns, right? So a breakout is when the price gains enough momentum to break past resistance, right? So for example, you see this range here, resistance is 300 USD, and the price gained enough volume and momentum to create a breakout. As we can see right here, we had a lot of volume coming in, and so therefore the price broke out and hit a new range. So this kind of created a new bull trend. Now, had the price hit resistance and kind of pulled back, then perhaps we'd stay in this range, or maybe it would have turned bearish and we'd see new lows. So that's a breakout, and a breakdown is the opposite. It's an area in price where you have multiple points of support that break down and make new lows. So for example, you see a lot of support over through this area right here, and then you have a breakdown where the trend starts to move down lower, right? And support breaks. And then you have things like fake outs, right? So fake outs are, you have a breakdown of support, but it doesn't create a trend, or it could be not just a breakdown support, but a fake out above resistance. So you see here, it kind of shows a breakdown of support, but it just quickly snaps and reverses. It comes back up, right, and recovers, at least within this general range right here. So, and this, again, the same can be applied to breakouts. So one thing that's very important when you're trading is to measure risk to reward, right? To assess how much or what percentage of your trade are you willing to risk versus what's your target, right? It's good to have an exit strategy and figure out where exactly you want to go. So for example, let's say this is building momentum and you say, okay, we're getting a breakout above 300. Where do I want to take profit? So, a quick visual representation is you can see that there's a lot of support here along through this area. So on this breakout, naturally, this might turn into a resistance area. As we can see, there's resistance here, support, right? And sometimes on downtrends, prior support becomes resistance, kind of makes lower highs and lows. And on uptrends, just like here, prior resistance can turn into support as it makes higher lows and highs. So, if you were just to eyeball and ballpark this and say, okay, well, there's a lot of support and resistance in through this area. So if we get a breakout above 300, you can measure your risk to reward. So you could say something like, all right, I'll take profit right around prior support. So here's, let's say a 40% profit rate there. And then you determine, okay, well, how much are you willing to risk, right? So let's say you catch the breakout trade. How far can the price move against you before you decide to kind of cut out of the trade, right? And that all depends on, each individual trader and your particular strategy. Then you can you could also use things like indicators. So I'm just going to remove all this stuff. And there's a variety of different indicators that you can use. So you just go to Insert Indicator, and then you can choose a variety of different indicators. One indicator that's fairly popular is the RSI, known as the Relative Strength Index. And this kind of allows you to measure, it shows you like buying versus selling pressure in the markets, right? So there's a variety of different ways that you can use these types of indicators. There's also MACD, stochastic RSI, there's Elliott waves, there's a whole bunch of different things that you can use. We're not going to get into all of those in this video. That's something for more advanced level. So this is just a video to show you the basics of technical analysis. If you're interested in learning more and apply a variety of different trading strategies, feel free to check out our crypto trading school over at Skill Incubator. Hope you enjoyed the video, and I'll see you in the next one. Cheers.